In today's video, I'm going to show you my entire trading strategy, and I'm going to teach it to you step by step, sure, but in a very, very simple way. I have used this exact trading approach to make millions of dollars in Forex and crypto and stocks for the past nearly a decade. And I'm going to show you step by step. A lot of people ask me here in my free Telegram channel exactly how I trade. So I'm making this YouTube video to show you exactly how I trade. This is just a free Telegram channel where I post my trades and analysis and various things. I'll put a link in the description, the pinned comment. You can check it out if you want. It's just a place that I use to help people learn exactly what I'm trading, send out my analysis so they can follow along. But a lot of people wanted me to give a step by step. So I'm going to do that right here in this video. I'm going to keep it super, super simple. So the first thing you have to understand about the way that I trade is that I do about 90% less than what everyone else is doing. Quite literally put, if trading is taking you hours and hours a day, you could do this for about 15 to 30 minutes per day. And yes, that is per day, and still be able to do basically exactly what I'm doing. And sure, it takes time. A lot of, Forex trading is risky and most people lose money, but doing this is the easiest, simplest way I've ever found to trade Forex or crypto or stocks or futures or indices or whatever it is market you want. So what we're going to do is we're going to go to a chart. I'm here in Forex pairs. Forex is my bread and butter. And we're going to go to the daily. Now, what you'll notice is that price tends to just go back and forth, right? No matter what time frame you're on, price just goes back and forth, bounces around between zones. It goes up, it goes down. You never really know which way price is going, but it just goes back and forth. So when you look at the charts, you essentially have to you have to come to a sort of idea to decide which direction you think price is going to go. And then you have to participate in that idea with controlled risk. So exactly how do we do this? Well, we just look at where price has bounced multiple times in the past, and then we draw areas on the chart where price seems to have respected those zones. The zones are basically just saying price tended to bounce there a couple times before, and then when you're using daily and weekly zones, I'm utterly convinced they work better, they have a higher probability than lower time frames. And I can't prove that, but based on my past nearly a decade of trading experience and over the past 8 years of running my free Telegram channel and having taught over 4,600 paid clients how to do this, I have learned that higher time frames, there's just nothing better, at least when it comes to Forex trading. So in Forex trading, I wait for price to get to one of these major zones, and here is my entire trading strategy. I buy at support, I put a stop loss below the zone, then I put a target at 1-to-1 risk reward ratio, and then whenever price gets to a resistance zone, I sell at the resistance, and then I put a stop loss just above the zone, and then I put a target at 1-to-1 risk reward ratio. So whenever I'm doing this, another thing that I do is that whenever I'm getting into a trade, right, the 1-to-1 risk reward ratio is just to structure the trade risk. That's all. Support resistance has zero ways of predicting price. There's no predictive power or speculative edge inside drawing arbitrary rectangles on your chart and entering buys and sells at them. However, the beauty behind support and resistance, which is basically what most technical analysis boils down to, is the idea that it gives you an amazing way of controlling risk. It gives you a sexy, viciously audacious way of controlling risk because it gives you a place to enter a trade. It gives you an invalidation for if you're wrong, meaning price just breaks past the zone. You can put a stop loss there. And then it gives you a place for a potential target, which is a 1-to-1 risk reward ratio. Then what I will do is if price goes into profit, generally speaking, I'll hold the trade. And if it starts going into loss, generally speaking, I will close the trade. As we speak, a trade that I called this morning in my Telegram channel is a trade on USD JPY. I've entered this trade. The original risk was 100,000 US dollars. Yes, I have millions of dollars of trading capital. I risk a high amount per trade, usually anywhere from $50,000 to $100,000 per trade. Sometimes less, sometimes more. On this trade, I have since added this morning, and I've tightened up my stops in order to make sure that I'm controlling risk. And the risk on this trade is now $150,000. And you can look at my actual trade with all the entries and all the P&L right here. It is. I'm currently in a little bit of profit. Price is still floating around the entries, but we're going to see which direction this goes. If it falls, I will make a profit, and if it doesn't, I will have a loss, likely smaller than whatever the stop loss is. So I've risked $150,000 on this. I might lose $50,000 to $75,000 if I'm wrong, but if I'm right, I'll try to hold it all the way to the profit target, hopefully making a profit. So let's go ahead and start by just showing you an example of this trade and exactly how I took it. Okay, we're going to be step by step and very slow here. What I did is whenever price was going sideways here at this zone, I'm going to show you right here. We're just going to wind this little replay zone back. So here in the replay mode on TradingView, we can see there's this little resistance zone here. And when price was back here about a week ago, I had an alert sitting here at this zone. So what did I do? I set a trading view alert. My alert was about right here midway through the zone. And all I did is I just clicked this little button here. I clicked add an alert to USD JPY. I'm in backtesting mode, so I can't add an alert right now, but you get the point. I put the alert right here at the zone. And then what happened when price got into the zone, I entered a short position. So we now see, I've clicked it forward in real-time data now. Price popped up into this zone. And then right here, if we go to the 1 hour, I entered the trade right whenever it got into here yesterday. And I'll actually show you the exact spot that I entered this trade right here. The trade, I called it here in my Discord server. I have a little private, sexy Discord server. So yesterday at 8:30 a.m., this was my exact trade. This is the trade, the original entry where I risked $100,000 on it. You can see it's USD JPY in the daily chart. Notice how simple it is. It is a black background with white candles. An entry at the zone, a stop loss past it, and then a target at 1-to-1 risk reward ratio. The reason the stop loss is so wide is so that way if price starts breaking above the zone or going sideways, I likely won't get stopped out. Sometimes it does stop out, sure, but that's what a stop is for. It's the maximum risk. It's sort of an emergency, right? It just takes you out of the trade if you're completely wrong. But usually what I'll do is if it starts breaking above the zone or going sideways or looking like it's going to break out, then I'll just close the trade. I'll take a break even, small profit, small loss, and I'll move on to the next trade. So imagine this, if you only get it right half the time, which is statistically all you're likely to do, right? Price just goes up or down. Half the time it'll go up, you'll lose the trade, you'll lose some amount of money or you'll break even or it'll close it halfway to the stop loss. But if it goes into profit, then you hold it. What this guarantees long-term is that you make more money than you lose. Now, I can't guarantee you that this is what will happen because everybody's different. 90% of traders or more lose money trading. Trading's risky. It's really hard. It's just something that's really difficult and kind of a pain in the butt to do. But when I do this right here, and when I teach a lot of other people how to do this, it teaches them how to simplify their trading in such an elegant, sophisticated, and I would even argue sexy way that they can structure their risk, they can get into trades that are working, and it's simple enough to duplicate over and over. There's not a lot of layers of complexity. How hard can it be? You just wait for price to get to major support resistance zones in the daily and weekly charts. Then you enter a sell when price gets there. If it's at resistance or for a buy at support, you put a stop loss above or below the zone, and then you set a target of a 1-to-1 after that's done. And you can risk exactly what you want per trade. $100, $1,000, $10,000, or in this case for me, $100,000. So that's why I called this trade out yesterday. You can see that right here, I called an add to this. I said, I've added shorts to USD JPY. The risk for these new entries is $50,000. And that brings the total risk for USD JPY to $150,000 for a potential of a $180,000 profit if it goes down and meets the targets. Which way shall we go? For our sake, I pray she falls. And so I entered, and then currently it's sitting right here in a little bit of profit, right? This is still basically break even if the profit target's $180,000. But, we'll see which direction she goes. And so with USD JPY, as soon as price got there, entered. When it popped up a little bit further into this zone this morning and started to reject again, I added another sell, another layer of sells for 50K risk. And if price starts breaking above this zone, I'm just going to close it. It'll be a relatively small loss compared to what the stop loss is, right? So I might lose a third or a half of whatever the stop loss is, which I can live with, given the fact that long-term I make money. So with that being the case, that's why I chose to enter a sell on USD JPY. Now, there's another thing you have to know is that whenever price gets into these zones, it's generally not a good idea to enter instantly. Usually what you want to do whenever you get to the 1 hour is you want to get to the 1 hour, you want to wait for price to start bouncing away from the zone. In this case, it was this candle right here that started bouncing away from the zone. And then what I did is I entered after that candle started going down, right? So price got into the zone, it started to bounce away, I entered short, and in that case, it went down into a little bit of profit, went sideways for a while, then it popped back up. Yesterday, as it sat, I was in $40,000 of profit on this and another trade, which was GBP CAD, which actually came back and hit the stop loss for a small loss of $25,000, much smaller than $100,000 of risk. That lost 25K, but USD JPY still sits here and remains in a little bit of profit right now, and this could quickly turn into an absolutely huge profit should prices continue going in the direction that I anticipate and that I would like them to go. So whenever I did that, right, price got into the zone, as long as it doesn't break the zone immediately, as long as it gets into the zone and on the 1 hour, it just starts kind of tugging away and bouncing at the zone, meaning it just starts to drop if it's at a resistance zone, or if it gets into a support zone, it starts to kind of pop up and bounce. That is all you need to be able to enter these trades. We're going to go over GBP CAD because that's a trade that I lost. So what did I do here on GBP CAD? So yesterday I had this zone marked up right here. So price had gotten down into this zone. Now, why did I draw a zone here? Because price had bounced here, here, went a little bit deep, but still bounced here, 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 and here. So all of these regions prices had a nice little bounce at. So price got into that zone and I waited to enter. I waited until price got there into the zone, and then it started to bounce up. And then as soon as it started to bounce up, I entered the trade around this region right here after it started to pop up. So it started to pop up, and then what I did is whenever price started to pop up from there, I ended up getting into a long as it was going. I actually think it was after this move down here, then price started to pop up, and then I entered a long as it was going up after this. And then this morning it came and it took me out right at my stop loss, which was basically like down here around this region, just underneath the zone. Now it looks like it might be going back up. I'm not too sure. What I'm going to do is I just remove this zone from my chart, and I have the alert down here at this next major zone where prices had nice bounces here as resistance multiple times, broke above, had a nice bounce at support. Now if it just comes back here, the idea would be I enter a buy right there, provided the 1 hour shows that it gets there, it starts to bounce a little bit, then price breaks below or it comes to the upside. The idea is that you just make more when you're right versus what you lose when you're wrong. And if that can be true, my friend, then trading this simple strategy is definitely the thing for you. It is so simple to execute on a daily basis because you basically don't have to do much at all, right? Once you get your chart set up on Sunday, you spend like 15, 20 minutes going and just clicking through the pairs, setting up the alerts at all the major zones you see close to current market price. Then you just pretty much chill and wait for price to get there. Then when price does get there, you'll get the alert. Go to the 1 hour, make sure that price is not quickly breaking the zone. And then what you can do is you can be able to get into that trade and participate, and you can let the outcomes be whatever they're going to be. So that is what I did on USDJPY this morning. I'm going to show you this in TradingView replay mode. We're going to go here to what's called the random number generator. I'm going to pick a Forex pair between 1 and 10. The number we got here is 3. So let me just go here down 1, 2, 3. We're on GBP AUD. I'm going to remove all the drawings. I'm going to go to the 1 hour, and then I'm going to select the bar to go back to, which is a random bar. So this puts us in May of 2018. Okay, cool. So now what we'll do is we'll go back to the daily. This is exactly how to start from scratch, okay? So what we do is we can notice there are a couple zones here on the chart. We've got a zone up here at the highs, and we've also got a support zone. It looks like way down here, maybe around these lows. We might be able to put it like right there. The problem is price is so far away from these areas that it's going to interact with a lot of other zones before it gets there. And this is a daily chart. This one move just from those highs down to here, that took probably like 25 bars. So that was almost a month to play out. So we don't want to be using zones that are far away from price. I go to the daily charts. Sometimes I'll go to the weekly, and then I zoom in on where current market price is. And then I look at the next clear zones above and below price. So what you'll notice is you have a resistance zone right here. And then we also have a support zone right here. This is really close to price, and you want it to be clear and painfully obvious. You don't want to be using zones like this where price slashes through it a bunch of times and it's kind of hard to decide, is it down here? Is it further up here? Should you encapsulate this previous high up here? Zones where that is the case, they're just harder to trade. You want stuff that's super, super clear and obvious. And this is the most important part next to controlling risk, of course, is selecting a zone that's clear. You want a zone where it just bounces pretty consistently almost every time, because that is going to help play into your edge, the little thing, the little magic part of your trading strategy that keeps you profitable. So I've also seen not only that resistance, but I've also seen a nice support here where prices just bounce multiple times. You want to keep it very, very simple. If you have to play too many mental gymnastics or question yourself too many times, guess what? It's a better idea to just not draw the zone and to just wait. So then what I'll do is I'll set an alert there at the zone. So in this case, I'll set an alert right here. It needs to be at least halfway into the zone. In this case, that looks perfectly fine. I've used this little plus sign here on TradingView to draw the horizontal line. This is going to function as just an alert. It's going to be like, if you were doing this in real time on TradingView, that would be, you just set an alert there. Since we're in replay mode, and this is 2018, which was like 8 years ago. This will just be the case where it's going to function as an alert. And then what we're going to do is we're going to wait for price to get into that region. We're going to see if it bounces, and then we're going to take a trade. So let's see if price can get all the way down there into that support zone. So we have to wait. It's very important to wait and to not get in real quickly. So price does in fact get here into the support zone. Now we need to wait for price to start to reject. We need to wait for price to start kind of turning around and going to the upside. So price has got here into the zone. The alert will no longer be there. Price has pushed really deep here into these lows. Now let's see if it starts popping up. Let's wait for these 1 hour candles to start painting something that is a bull candle. We get it right there. So then we can just enter a buy position simply. This may sound too simple, but this is legitimately, this is all I do. And if you don't believe me, hit the link in the description or the pinned comment. Go check out my Telegram because I post trades like this basically every day. Very, very simple. So we're going to enter a buy. We're going to put our stop loss below the zone. We don't want to put it like, hundreds of pips or 1,000 pips away, but we don't want it to be just below the zone either like that, because we'll take a lot of losses just if price barely pins past the zone and then it quickly turns back around. I like to give things a little bit of room. That way, in case it breaks below the zone or starts going against me, I have plenty of time to be able to manage the trade and get out at a small loss. So I'll put a stop loss there, and then I'll put a target at 1-to-1. Now, here's a very important part. If it starts going into loss and looks like it's going to go against us towards the stop loss, we want to try to do our best to get out of the trade early. We want to try to close the trade at a smaller loss, so that way we keep the losses small. If it starts going into profit, we want to hold it. And the cool part about this is you can go and test this for yourself right after you get done watching this video. You finish this video, check out my free Telegram channel, go and join that so you can follow along for free, and then go and back test this for yourself, and then start a demo account and start doing this on a dedicated demo account for 3 to 6 months just to practice and get the repetitions under your belt. So we're going to click through this candle by candle, and we're going to see which direction it starts to go. Does it start to go against us, or does it start to go into profit? I'm going to try to go very slow here. That way we don't get anything take off too quickly without us. And we're going to see if it starts breaking these recent lows to the downside, or if it starts breaking the recent highs to the upside. You never know which way it'll go to begin with, so you have to be very, very patient and wait for things to start playing out. So far, it's just kind of going sideways here at the support zone. Looks like it's going a little bit deeper in the support zone, so now we're going to see if it breaks the low right here. Is it going to go sideways? Is it going to go up? Is it going to break the lows? We don't know. We got to wait for price action to paint. I'm clicking through very, very slowly so we can look at each 1 hour candle, make a decision. And realistically, all you have to do is, if you think it's, you want to look to get out of the trade if it breaks the lows, you can just set an alert below the lows. Then you don't even have to look at it really. You can just, wait for price to get to one of the locations. And you don't have to set an alert in profit, because if it's in profit, you're just going to want to hold the trade. So in this case, it's still kind of going sideways. It's still ranging. I'm going to click a little bit faster in the interest of time. We'll see if it starts going up. So it starts going up. It pulls back to the entry. Starts going down. Tries to break. So we would have got that alert triggered right there. It went down, but then the candle quickly pushed up and closed bullish. So for now, we're going to hold this trade, but we're going to be a little bit more, let's just say, cognizant and aware of if price starts moving towards the downside. So in this case, it comes right back up to where the entry's at. We're going to have to see, was this just a liquidity flush? Is it a fake out? Is it going to try to have a continuation to the upside? We don't know, but we need to be watching price action to try to see. I'll also point out that in this case right here, we're also kind of still making lower highs. And then one could argue we were also still kind of making lower lows into the zone. So we're just going to have to pay attention and see what ends up happening. It's a major zone. That's why I only use the major zones, because even if it's like a nice trend in one direction into the zones usually have enough merit and a lot of, say, enough orders at the zone to have price have at least a little bit of a bounce. That's one of the reasons I like using 1-to-1 risk reward ratios, because it makes things so much easier. You have so much easier targets getting hit, and it gives you plenty of room to get out a little bit early if the trade starts to lose. So price is still going sideways around the entry. Went halfway to the stop, pushed up, went halfway to the profit target, moved back down. Let's see which direction this thing can go. So we pull back, we're pulling down here into the zone. We're bouncing along the lows again. She's taking her own sweet time. We have a bear candle. And in this case, this is going to be a trade that I elect to close right here. So we're going to close here. We're going to close halfway to the stop loss. And then what we'll do is we'll put this right here. This is minus 0.5 R. When we're using R multiples of determining what risk is, 1 unit of risk is wherever your stop loss is at. So if you want to risk $100 per trade, 1 unit of risk will be where your stop loss is located. So if we were to risk $100 on this breaks down, we close it right there before the stop loss gets hit. And this is we take half of whatever the risk was. So instead of $100, we only lose $50 on this. Cool, because if we were right, we would have made $100, right? It would have made the full TP if we were right. But because we were wrong on this one, it looks like it's not going to work out. We've lost that. Now, we're going to let this play out, and we're going to see what would have happened. So price looks like it's going sideways. It tries to pop above the zone, and then it would have gone back down further, and it would have hit the stop loss. That's the beauty behind this trading approach, is that you can avoid that happening a good amount of the time by just getting out of the trade early. Okay, fair enough. Now what we're going to do is we're going to select another pair, and we're going to go and look at that one. So I've selected another pair between 1 and 10. We've come to number 6. I will go back to the chart. We're on 1, 2, 3, 4, 5, 6. So Euro Canadian dollar. I'm going to clear all the chart drawings from here. And we're back in 2018, June of 2018. So we're already here at a random point on the chart. Now we're going to look for the most clear support resistance zones above and below price. Now, I don't really see anything too clear in here. I'm looking for zones. This looks a little bit too hairy, meaning there's not that clear of a bounces. We've got a low that bounced right here. I don't really see anything clear here, so I'm just going to remove these drawings. I'm going to keep going. We're going to see if we can get to somewhere new on the chart. The cool part about this is that you don't have to take every single trade. All you have to do is you just have to wait until the Forex pairs. There's about 24 to 26 FX majors and minors, so you're always going to have plenty of trading opportunities. There will be some times where you don't take a trade on a single currency pair for a month, right? A month or even multiple months at a time, and that's okay. So now we're having price to kind of start bouncing here at these lows. So let's see. So we've got these lows right here where price is bouncing. And we also have another set of lows down here, which was also a resistance zone. So now that we have a little bit more market structure created, we can look to go ahead and get into a trade. So let's go to the 1 hour and let's see what price has been doing here at this zone. So it came down here into the zone. It tried to break twice, looks like. Then it bounced up a little bit further. And now it's come back into this zone and started to go sideways for now. If this looks like it's going to start having a move towards the upside, we can get in. And also if it pulls back down, we might be able to get in at a nice entry, like kind of around like this little region here where these lows are. So let's see what price starts to do. Is it going to break out upwards or downwards? Let's see. So it looks like it's going to break out upwards. Now, the moment I enter this, right, it could instantly reverse and go back to the downside. That's okay. The fact that we haven't broken this zone and it's already tried to take like 2 or 3 drives here to take out the zone and failed and instead come back up, that's a good sign. So since price has come into the zone and in fact appeared to start it to bounce, we will enter a buy here. We'll put our stop loss not right below the zone, not right below those lows, but nice and clear below the zone. That way it gives us plenty of room to get out if this trade starts to not work out. We'll put a profit target up here at 1 to 1, and then we will click through to see which direction this goes. So it pulls down first, and then it starts going into some profit. We go up here, and now right here, is it a good idea to close the trade? Because we're almost to the profit target. And then also check this out. It's a previous little support zone. So should we close the trade early? The answer is no, absolutely not. We want to hold the trade to the profit targets. You do not know where price will bounce at. Price is going to go up, it's going to go down. It's very, very difficult to ever predict where price is going to go. That's why we don't try to predict price using support resistance. Instead, we use support resistance as a way to structure and control risk. That is the best way to use support resistance. So in this case, it goes sideways. It's trying really hard to get to the target. It's struggling now, starting to pull back. We don't know which way it's going to go. It could come all the way back to the entry, but we do not close this trade early in profit. We hold it. 90% of trades that go into profit, you should be holding them. In some cases, it's okay to close them, like if it's almost to the profit target and it's on like a weekend or something, like it's on Friday and the market's about to close. You've basically had the trade almost come to the profit target. Those are okay to close a little bit early if they're basically almost to the target and the market's about to close, or something like that. But in most cases, we do not want to mess with the trade, even though it's bounced here a couple times. If you get into the habit of closing your trades early, what happens is you will cap your total profits. And you will sacrifice how much profit you could make because you're closing winners early, but you're also holding losers longer, and you're not closing your losses early. So it messes up the risk structure if you don't close it. So in this case, this starts going down here into the support. This sucks because it almost went to the profit target. However, unless we take out these lows right here, there's no technical reason to close the trade. So what I'll say, if price bounces down here, we are likely going to close the trade. And if it bounces up from here, we're still going to hold the trade. So let's just see what happens. We need to watch what happens like on the candlestick, if it closes above or below this zone. So we'll just watch what price action does. This is looking like it's not going to work out. But then again, we don't know. We don't know which way price will go. It could bounce here. It could break further down, go towards the stop loss. We could have a news spike in which one candle goes straight to the stop loss. You never know. And you always need to be prepared for those outcomes, because if you're not prepared for those outcomes, you'll end up having like wishful thinking and cognitive dissonance and using a bunch of mental gymnastics to try to justify why you might be wrong instead of looking at what price is doing. So we're going to keep clicking this forward. We're going to see what happens, and it's either going to go up or down. It's very difficult to predict price, which is why I don't even try to predict price. I just wait for it to get to a major support resistance zones, and then I enter, not because I think price is likely to bounce there, but I enter because support resistance gives you an amazing, beautiful, easy, simplified way of controlling risk. So let's see if we can break a little bit higher. Price is really trying. We're trying to get up here to the previous highs. It's going up for now. You know, we could break back down at any moment, so we don't want to get our hopes up or anything. We want to just hold the trade if it's in profit. We want to try to get out a little bit early if it looks like it's going to go to the stop loss. So far, we're still bouncing here at this zone, but it's really struggling. It's really going sideways. And of course, we have this previous set of lows down here. Okay, price it went into drawdown. Now it's going back into profit. We have no idea which way it's going to go. We're going to wait. We're going to keep things nice and simple. And this right here will be a nice location to see if it can actually break out to the upside. So if we can just get a higher high here towards the profit target, and that'll be good. We're so close. Why not close around these previous highs? A lot of people would say, like, look, if we would have done that before, look, we'd have been in profit and already out of this trade, could have even taken another trade. Why not close right here? Because it's at previous highs of resistance. Again, even though if you think that might be the best decision in the moment, if you do that repeatedly, it murders your profitability because you're closing winning trades early when they're winning. The best decision is to hold the winning trades regardless of what you think is going to happen, because you cannot predict price. So we're right here along the highs, and in this case, it does in fact break higher and it hits the take profit. So in this case, how much profit would we made on this? In this case, by managing risk, we would have made plus 1R. So I want you to take the stats from the last two trades. Two trades is not the best sample set, sure. But again, I've called thousands of trades in my free Telegram channel for the past 8 years. So if you want to watch me do this live, join that free channel. It's there to help you. It's there to support you in your trading journey and help you learn how to simplify things and gain consistency. But just taking this small little data set of two trades, we lost one and we won one. If we would have closed this winning trade early, we would not have made a full profit on it, right? If we had risked $100, we might have only made $50 to $75, maybe $80. And if we had held the last trade to the stop loss, we wouldn't have only lost $50. We would have lost $100. But instead, because we structured risks based on a clear support resistance zone with this super simple trading strategy that I've just been using for years, I wish more people used it because of how simple it is and how effective it is. We have had, with only a 50% win rate, we lost half of the stop loss in the last trade. So if we risked $100, we would have only lost $50. And on this one, we had the full take profit target hit. Sure, it took patience. We had to wait for it to actually continue all the way into profit. And a lot of people don't have that patience. And then again, a lot of people aren't profitable trading. That's why I'm trying to teach you this, to try to drill in the concepts. This one went all the way to the profit target. So we made $100 here. We lost $50 on the last one. And then with this, we have come out in a net profit of 0.5R, or $50, if we would have risked 100 on each of them. This is the beauty behind trading this way. And I encourage you to go and test it for yourself. Go and back test it. Check out my free Telegram channel. Follow all my trades in there for free. And let me know in the comment section if you thought this video was useful. If you liked this video, thank you. I really appreciate it. And I will see you in the next one, my friend. Happy trading.